Well, hello and welcome to this Moneycontrol live stream. You're watching Morning Trade with me, Nandita Khemka. Well, over the next 30 minutes, we'll be talking about the cues for trade, the stocks that will be hogging the limelight in today's session. And of course, we'll also be talking about the Q4 earnings expectations from the IT sector, given the fact that TCS and Infosys will be reporting their Q4 earnings this week. And if you have any stock-related queries, don't forget to write to us on our live feed and we'll have them addressed by our expert on the show. But before we do all that, let's take a look at the top headlines at this hour. Wall Street rallies to close a holiday-shortened week on a high. Futures rise after jobs data for March is largely in line with estimates, indicating a resilient economy. Investors will now look ahead to key inflation data due on Wednesday. Meanwhile, Asia opens largely higher after the extended weekend. The adjusted SGX Nifty is indicating at a dash at the 17,700 mark. Crude rallies for the third straight week to trade at around $85 a barrel. Prices gained over 6% last week after OPEC's announcement of surprise production cuts. Government accepts suggestions of the Kirit Parikh panel on gas pricing. APM gas prices will now be announced every month with a floor price of $4 and a ceiling of $6.50 per MMBTU. Prices will be pegged at 10% of the international price of the Indian crude basket, and the ceiling will be maintained until the end of FY25. Lots of business updates trickling in. Tata JLR sales grow 19% in the fourth quarter. Titan's Q4 revenue rises 25% on strong non-jewelry business growth, while the jewelry business also grows over 20% on a low base. Sobha, meanwhile, sees record sales in the quarter gone by. Also on the show today, TCS and Infosys kick off Q4 earnings season this week. What should one expect in a seasonally weak quarter? We get you more on that on the show. Well, as we were speaking about the fourth quarter earnings season being kicked off by TCS and Infosys this week, let's get on board then Gaurang, Shah of Geojit Financial Services to decode what one should be expecting from these tech giants. Good morning, Gaurang. Good to have you on the show. Well, it was a long weekend. Now we are back to the grind and an important week going forward, given the fact that Q4 earnings season kicks off this week. So, Q4 is generally a very seasonally weak quarter for the tech companies, right? Given the fact that, we are staring at a recession in the US, what are you expecting from TCS and Infosys going forward? Do you expect some sort of weakness in revenues and profit?
Thank you, Nandita, and morning to all of you. So I think we had a long extended weekend last week, and this week also on Friday. Markets are off because of Ambedkar Jayanti, so we have one more extended weekend. About the earnings front, Nandita, my sense is that there were a lot of people on the street who had virtually written off IT sector and had advice to stay away before the third quarter earnings, and then things turned dramatically on the earnings front for the third quarter, and of course the verbatim given by the management in terms of their business outlook, not only for the fourth quarter, but for the future to come by. And they sound extremely strong and confident about the deal pipeline, primarily. Secondly, large ticket clients and new acquisitions. The only problem area that I feel immediately from a short to medium term, if you will, is the attrition rate. But there again, I think the managements were quite confident that as and when the need arises, new headcounts will be taken in and everything will be taken care of. So, though seasonally it is a weak quarter for the IT sector this fourth quarter, but my sense is that they will end up doing a shade better than what they have done. In the sense, I think there will be a little bit of positivity in the number on a couple of counts. One is, of course, the growth for going forward. Secondly, the deal pipeline. And thirdly, the revenue guidance. I think all these things should go well with the market, and possibly we'll see some kind of stability coming in. But I don't expect any, flying colors out of the IT sector fourth quarter. At best, I think there'll be a shade better or a tag better than what the street is expecting.
Right. Gaurang, since you mentioned guidance, we did see Accenture lowering the upper end of the guidance when they reported their quarterly earnings. So in that sense, do you expect any of these giants to scale down the lower end or scale up? In fact, scale down the upper end of the guidance or, lower the lower end of the guidance as well?
we all know, Nandita, that all the IT companies management are very conservative when it comes to giving guidance.
That's true.
And I think they will continue to do that. So I don't expect any major downward reaction or major, positive commentary. And just to take a leaf out of what Accenture has done, I think, and not to forget, in the third quarter, the management did say that whatever is happening in US and Europe or elsewhere in the world, they are not really, disturbed by that particular happening. And they, in fact, sounded very strong in terms of their business growth going forward.
Right, since you mentioned what's happening in the US and Europe, TCS does have some exposure to some of these US, regional banks. Given the fact that what has happened with SVB and, subsequently in Europe, we saw, Credit Suisse being rescued by UBS. In light of that, when you say that you're confident on the deal pipeline, that could impact some of the, conversion of large deals for some of these IT companies. So what's your thought on that front?
So you look at glass half empty, I look at glass half full. I think these are the opportunities for those banks who have lowered their guard and exposed themselves to vulnerability to come forward and put their act together. In the sense that, and it was not too long ago, I think it was in 2018, and I think the life comes a full circle. Again, in 2023, we are having the, similar sectorial problem. I would not say similar problem because that was the great financial meltdown because of credit issues. But this time also, there have been some guard that were let down, and we have to face what it has to face. In terms of deal pipeline missing out for those entities or banks who have put their hands up in air, I think they would definitely go down not with that kind of positivity. But for the rest of the financial institutions, I think making the environment secured enough, safe enough for people to go and operate in that environment will be the need of the hour. So I would say that the glass is half full, and it will create more opportunities to cater to much high demand and much more, sophisticated IT environment, which will possibly lead us to, high revenue products, and that would translate into a little bit of more positivity. But it may take time; it not happens immediately. But I see it as an opportunity.
Well, the view is extremely positive when it comes to the IT pack from Gaurang. But Gaurang, we did see a lot of these top-level changes when it comes to companies like TCS, of course, even Infosys for that matter. So do you expect any change in business strategies? And what is it that you would be looking out for from the management commentary from TCS and Infosys?
So I think Mr. Gopinathan will continue to be as a guiding post. That's what we got to understand. Nandita, correct me if I'm wrong. And transition will happen smoothly is what the verbatim was when the PC was there. And let's face it, Nandita, these kind of changes are not only restricted to IT sector, but across the sector. Maybe it is because of personal reason, maybe because it is of age limit, and maybe it is because of passing the baton. And I am also of the opinion that there is a tremendous amount of talent pool that is available in India. And there is no dearth of getting the next person to take in charge and take the business to the next level. Change in strategy, I think only time will tell. It's too premature to say anything about that. But my sense is that business will continue as it was earlier, and possibly it will grow, given the kind of guidance and back-end support that Mr. Gopinathan will be there to provide for. Let's wait and watch, Nandita. I think jumping the gun would not be right on my part. But I expect, and these changes will keep on happening in any company, in any sector. So we should not be disturbed by that, and change is something that will never stop.
Well, change is the only constant, as they say. But last question to you, which of these IT stocks are looking attractive as we head into the earnings season out of the top 4, TCS, Infosys, HCL Tech, Tech Mahindra? Which one would you place your bet on now?
Well, if I have to put my finger on a single stock, then definitely it would be TCS. And if you give me the liberty of choice to pick another two, then I will possibly pick up Tech Mahindra, HCL Tech, and the fourth one will be Infosys.
Right. Well, with that, Gaurang, thanks a lot for taking out time and putting things into perspective for us and sharing your thoughts on the entire IT basket. We look forward to getting you back on the show and discussing some of these IT numbers when they're out. Well, on that note, let's shift focus to the technicals then. Joining us is Rajesh Palviya of Axis Securities this morning. Good morning, Rajesh. Good to have you on the show. SGX Nifty, when I last checked, was somewhere around that 17,700 level. And on Thursday, we ended around that 17, just like a whisker away from that 17,600 mark. So 17,700 given in today's session, or what does it look like?
Yeah, good morning, Nandita. Yeah, so definitely last week was very good for the market, and Nifty now managed to break out above 17,500 level. And overall, if you look at the short covering which we have witnessed for both the indices, so we believe that yes, this momentum is likely to continue further on the higher side, and possibly Nifty can scale up further higher towards 17,750, even 17,800. So those who are already long in the trade, they can now trail their stop loss on the higher side towards 17,450 to hold their long position, and possibly immediate target for Nifty around 17,750 to 17,800. Even if we talk about Bank Nifty also, Bank Nifty has also witnessed a huge short covering action, and almost now Bank Nifty is closed around 41,000 level. So if we open above 41,000 level for Bank Nifty also, then possibly another round of short covering we can expect in the Bank Nifty also, because most of the call writers needs to cover their position. Because if we go with the weekly as well as the monthly call concentration, that is at around 41,000, 41,500. So in today's session, if we hold 41,000 level, then possibly next target for Bank Nifty around 41,500. So both the indices are looking attractive and positive on the bullish side. And one should buy on dip. One should use buy on dips as a strategy as of now. For Bank Nifty, our stop loss is now at around 40,750, and upside target is 41,500.
Well, those are the levels to watch out for on the Nifty and Bank Nifty. Since we are talking about Bank Nifty, there are a couple of queries coming in on some of these banking shares. One is on Canara Bank. Dave has written in and he wants to know your thoughts on that. Over the last 5 days, we've seen the stock doing pretty okay, gaining somewhere around 3% or so. And the other one is Bank of Baroda. Naveen has written in and he wants to know how the chart setup is looking like for Bank of Baroda. So what would your thoughts be on these two counters?
So in recent rally, we have seen major contribution came for the Bank Nifty from the private sector bank, and especially ICICI Bank, HDFC Bank have done well. But looking at the overall setup for most of the PSU bank, they are all on the verge of giving breakout on the last 3-week consolidation. The same structure for Bank of Baroda as well as for the Canara Bank. Canara Bank is almost trading near to its last 2-week consolidation range breakout. If Canara Bank manages to cross about 288 level, then possibly it may scale up further higher towards 300 level also. So if you are if you want to buy this stock for trading perspective, wait for 288 to give breakout. Then you can buy with stop loss of 283. Upside target is 300. For Bank of Baroda, again, immediate resistance area is at around 168, 169. If the stock crosses those levels, then next target for Bank of Baroda would be around 180 level also. So both stocks are almost on a verge of giving breakout on the near term as well as on the short term setup. So wait for another 1 to 2% kind of price action on the higher side. Then the breakout trade will emerge, and then both the stock one can buy.
Right, so that's the call on Canara Bank and Bank of Baroda. Let's also talk about Titan, which according to me is the stock of the day. It has come out with its Q4 business update. It has clocked double-digit growth across key verticals. In fact, if you look at the non-jewelry business, that has clocked somewhere around 19%, and even the jewelry business has grown over 23%. And gold prices, of course, are shining at record levels. And over the last 1 month, Titan has done pretty well for itself, gained somewhere around 7%, if I'm not mistaken. So what would your thoughts be on this counter as we wait for its fourth quarter earnings, performance?
So it's a very strong chart structure. Even on the derivative front also, we have witnessed long built up since last 3-4 weeks. And looking at the setup, stock is in uptrend since last 4 weeks. On the weekly chart, also stock managed to view breakout of its downsloping trend line. So looking at overall setup, we believe that if Titan continues to hold about 2,500 level, then possibly the next target in the short term could be around 2,600 to 2,650 on the higher side. So one can hold their long position. keep stop loss of 2500 for upside target of 2600 to 2650.
Right, so that's the word on Titan. But let's also talk about, auto space once again, because it seems to be in the news. Maruti has been downgraded by Goldman Sachs to neutral, and the target has been cut to 8,800 from 11,000. That's a significant cut. In fact, the FY24, FY25 EPS estimates has also been reduced to 15% to 18% now. On the other hand, if you look at Tata Motors, the JLR update has been pretty strong, and a couple of brokerages have come out with good reports and positive reports on the company. So how are these two poised now?
So if you analyze this Maruti setup, stock has corrected and taken the support from almost its December 2022 low, and stock has formed almost double bottom sort of formation, strong support area at around 8,000 level, and some pullback action was there since last 3 weeks. And looking at the near term setup, we believe that if stocks continues to hold above 8,400 level, then some more buying action we can see in this stock towards 8,650 to 8,700 on the higher side. So as of now, near term setup turned on the positive side. So our view is hold your long position with stop loss of 8,400. As in the last couple of days, stock managed to again regain about 20-day moving average also, so which is also adding up the strength in the near term setup. So 8,400 should be your stop loss to hold your long position. 8,650 to 8,700 is the target. For Tata Motors, strong recovery we have seen from, again, it's a multiple support area from 400 to 390, which is the very important support area for the stock. In the recent up move, again, stock is approaching towards its almost 12-month resistance area, which was at around the 440 level. So immediate resistance at 440 level, those who have already bought at lower level, they can book some partial profit around 440, 445 zone, and or trail their stop loss on the higher side towards 428 level. If stock manages to give breakout above 445, then it's almost 1 year time frame breakout on the monthly as well as on the weekly chart, and then next target should be around 480 to 490 also. So keep your stop loss at 425, 428 for your trading positions.
Right, so that's the view on the auto basket. Let's also talk about, oil and gas stocks. Of course, companies, stocks like IGL, MGL, Oil India, GAIL, all these companies will be in focus. The government has accepted the Kirit Parekh recos, and as a result of it, these companies have slashed PNG and CNG prices by anywhere between 6 to 8 rupees. If you look at some of these counters, MGL, IGL, which of these are looking best on the charts right now?
So I'll go with IGL because the stock managed to give breakout of almost 15-week consolidation, and multiple resistance area has been broken out on the weekly chart. Strong long addition has been seen in the last 2 trading session. And looking at the buying action, especially in last 2 trading session, we believe that if stocks continues to trade above 450 level, then possibly next target in the near term for IGL around 485 to 490. So it's almost 15-week breakout on the weekly chart. So we are holding our bullish view for the stock. 485, 490 could be the possible target on the higher side.
Well, so IGL is best poised on the chart when it comes to these gas stocks. Let's also take up some queries then. Prabhu has written in and he wants to know your thoughts on GNFC, which he purchased at 650 rupees or thereabouts. He wants to know whether it's a good time to average for the long term. I think this stock has done pretty okay over the last 5 sessions, up somewhere around 7% or thereabouts. Would you advise him to average at these levels, given the fact that he's bought it at a higher price of 650 rupees?
So if we look at the overall setup, stock on the long term basis, yes, stock is in bullish trend. But since last couple of months, some corrective action has been there, and now stock has approached almost near to its important support area of 520, and some recovery was there in the stock on the weekly as well as on the monthly chart. So looking at the near term, short term setup, we believe that if stocks continues to hold now 500 level, then yes, some more upside we can expect in the near term to short term. As he has already bought at the higher price, he can average out, but for the position which he is buying to average, he should keep a stop loss of 500, whatever quantity he is buying for averaging out. And in this pullback, book some profits around 580, whatever bought at the current level. Keep stop loss of 500 to average out your position, and the upside immediate target is 560, 580, and then if it crosses 580, then possibly stock may give breakout of its buying range around 630 where he has bought.
Right. I also want to get in a query on the Realty pack. This one is coming in from Raja Pasala, and he wants to know your thoughts on DLF. Of course, we saw a great run on the Realty pack on Thursday, given the fact that the RBI, rolled out a surprise pause when it comes to interest rate hikes. And the Realty pack was up over 2%, if I'm not mistaken. And DLF in particular was up somewhere around 4%. And it is slowly and steadily moving towards its 52-week highs. So how would you view this stock on the charts now? And what should one do if one wants to enter into this stock?
So very strong buying action almost for this month, 7.5% gain for the stock. In this process, now stock is trading above all its important short-term, medium-term moving averages. Looking at the derivative data also, the long addition is there in the stock, and the stock managed to give breakout on the weekly as well as on the daily chart. So we are bullish for the stock. If stocks continues to hold above 372 level, then next target for DLF should be around 400 to 405 in the continuation of this up move. And again, from the real estate pack, Oberoi Realty is also looking attractive. So both the stock DLF and Oberoi Realty one can buy for trading perspective. For DLF, our target is 400 to 405. For Oberoi Realty, we believe that if stocks holds above 885 level, then next target for stock would be around 930.
Well, that's the view on DLF. Hope that answers your query. The next query is coming in from Jaitu, and he wants to know your thoughts on Aarti Industries. The stock hasn't done all that badly, up somewhere around 8% over the last 5 sessions. So if somebody holds this stock, should they continue to hold? And what if one wants to enter into it now?
So almost a corrective move of almost 8 to 9 months now. Stock has taken the support almost around 500 zone, and stock has shown some recovery. On the near-term setup, if we analyze, the stock is now trading above 50-day moving average, which is almost at around 532 level. So our view is bullish for near-term setup. 530 is your stop loss. And if stocks holds this level for next 2-3 trading session, then next target for the stock around 565 to 580 for trading perspective.
Right. I want to get in your thoughts on one last stock. This one is Adani Wilmar. Q4 volume growth has come in at double digits of 14% on a YOY basis, and revenue growth has also, in fact, revenues have crossed 55,000 crore mark in FY23. The food and FMCG segment has grown somewhere around 40% on a YOY basis. The stock has made a strong recovery after what happened to, what happened post the Hindenburg report. So right now, how would you advise investors to play this one?
Still, this recovery is not sufficient for the stock to take out from this bearish zone, because the major damage is already done on the near term as well as on the short term chart structure. So our view is still not positive for the stock. We believe that until the stock not crosses above 480 level, there won't be any significant upside we can expect in the stock for trading perspective, or as well as for the short-term investment perspective. So our view is to avoid Adani Wilmar at this level. Let the stock to sustain above 480, then only one can think of to buy this stock, because overall structure for the stock is in bearish zone.
Well, the setup for Adani Wilmar on the charts looks bearish for now. Well, this wraps up our query segment for today, as we're completely running out of time. But before I let you go, Rajesh, leave us with some stock recommendations for our viewers.
So first stock is Cholafin. We believe that the kind of breakout which we have seen in the Cholafin is looking very attractive. Stock managed to give breakout of its resistance area. And looking at the setup, we believe that this stock can really further higher towards 880 to 890 zone. One can buy Cholamandalam investment at the current level with stop loss of 815. Another stock which we like from the capital goods, that is L&T. L&T is continuous moving in the uptrend, and the stock managed to give breakout of its triangular formation on the weekly chart. Looking at the setup, we believe that L&T can move further higher towards 2350 to 2360, one can buy this stock with the stop loss of 2245. And third stock which we like, that is Coromandel International. The stock has given breakout of almost a consolidation zone of 6 weeks. And looking at the setup, we believe that this stock can further move higher towards 960 to 970. One can buy this stock with stop loss of 900.
Well, so those are the stocks to watch out for in today's session. Thanks a lot for taking out time and joining us. On that note, Rajesh, good to have you on the show. Well, with that, we are completely timed out on this edition of Morning Trade. So it's a goodbye from me and the entire team that put the show together. But don't go anywhere, because coming up next is Opening Bell.